Financial planning is essential for every family, no matter the size or income level. It helps you set clear goals, manage your resources, and prepare for unexpected events. By planning ahead, families can reduce stress, avoid debt, and create a stable foundation for the future. In this video, we'll explore practical steps and strategies to help your family thrive financially. Let's start by understanding why financial planning matters and how it can positively impact your everyday life. First step in financial planning is setting clear, achievable goals as a family. These goals could include saving for a home, planning a vacation, or building an emergency fund. Sit down together and discuss what matters most to everyone. By involving all family members, you create a sense of teamwork and shared responsibility. This approach not only helps you stay motivated, but also ensures everyone's needs and dreams are considered as you move forward. Family budget is the backbone of any financial plan. Start by tracking your income and expenses to see where your money goes each month. List all sources of income and categorize your spending, such as housing, food, transportation, and entertainment. This process helps you identify areas where you can cut back and save more. Remember, a realistic budget is flexible and should be reviewed regularly to reflect changes in your family's needs. Life is full of surprises, and having an emergency fund can make all the difference. This fund acts as a financial safety net for unexpected expenses like medical bills, car repairs, or job loss. Aim to save at least 3 to 6 months worth of living expenses. Start small if you need to and build up gradually. Knowing you have a cushion can bring peace of mind and help your family weather any storm. Keeping track of your family's expenses is crucial for staying on budget. Use tools like spreadsheets, budgeting apps, or even a simple notebook to record every purchase. Review your spending regularly to spot patterns and identify areas where you might be overspending. This habit not only helps you stay disciplined, but also empowers you to make informed decisions about your family's finances. Once you've tracked your expenses, look for opportunities to cut unnecessary costs. This could mean canceling unused subscriptions, eating out less, or finding more affordable alternatives for everyday items. Small changes can add up over time, freeing up money for savings or other priorities. Encourage the whole family to participate in finding creative ways to save, making it a fun and rewarding challenge. Developing smart shopping habits can significantly impact your family's finances. Make a shopping list before heading to the store and stick to it. Compare prices, use coupons, and take advantage of sales whenever possible. Teaching children about the value of money and how to make wise purchasing decisions can set them up for lifelong financial success. Remember, every dollar saved is a step closer to your family's goal. Saving isn't just about putting money aside for emergencies. It's also about preparing for future needs like college tuition, a new home, or retirement. Set up separate savings accounts for different goals and contribute regularly, even if it's a small amount. Automating your savings can make the process easier and more consistent. Over time, these efforts will help your family build a secure and comfortable future. Financial education should start early. Teach your children about the basics of money, such as earning, saving, and spending wisely. Give them opportunities to manage their own small budgets or allowances. Encourage them to set goals and make choices about how to use their money. These lessons will help them develop good habits and a healthy attitude toward finances as they grow up. Financial planning works best when everyone in the family is involved. Hold regular family meetings to discuss your budget, goals, and progress. Encourage open communication and make sure everyone feels heard. This approach fosters teamwork and helps build trust. When everyone understands the plan and their role in it, your family is more likely to stay on track and achieve your financial goals together. It can be a major obstacle to financial security. If your family has debts, make a plan to pay them off as quickly as possible. List all your debts, including credit cards, loans, and other obligations. Prioritize high-interest debts and consider consolidating if it helps lower your payments. Avoid taking on new debt unless absolutely necessary. With discipline and a clear plan, you can reduce your debt burden and free up resources for other goals. Good credit score can open doors to better financial opportunities, such as lower interest rates on loans and easier approval for rentals. Teach your family about the importance of building and maintaining good credit. Pay bills on time, keep credit card balances low, and check your credit reports regularly for errors. Responsible credit management is a key part of long-term financial health. Insurance is an important part of financial planning. It protects your family from unexpected events like illness, accidents, or property damage. Review your insurance policies regularly to make sure you have adequate coverage for health, life, home, and auto. Shop around for the best rates and consider bundling policies for savings. Proper insurance gives you peace of mind and helps safeguard your family's financial future. Retirement may seem far off, but the earlier you start planning, the better. Contribute to retirement accounts like 401(k)s or IRAs if available. Even small, regular contributions can grow significantly over time thanks to compound interest. Discuss your retirement goals as a family and adjust your savings plan as needed. Planning ahead ensures you can enjoy your golden years without financial worries. If you have children, saving for their education is likely a top priority. Explore options like 529 college savings plans or education savings accounts. Start early and contribute regularly, even if it's a small amount. Research scholarships, grants, and other financial aid opportunities to help reduce costs. By planning ahead, you can give your children the gift of education without sacrificing your family's financial stability. Estate planning isn't just for the wealthy. Every family should have a plan for what happens to their assets if something unexpected occurs. Create a will, designate beneficiaries, and consider setting up powers of attorney. These steps ensure your wishes are honored and your loved ones are protected. Review your estate plan regularly and update it as your family's circumstances change. Taxes are a fact of life, and understanding them is key to effective financial planning. Learn about the tax benefits available to families, such as credits and deductions for children, education, and homeownership. Keep good records throughout the year to make tax time easier. Consider consulting a tax professional for complex situations. Smart tax planning can help your family keep more of what you earn. Automating your finances can save time and reduce the risk of missed payments. Set up automatic transfers for savings, bill payments, and investments. This approach helps you stay consistent and ensures your financial goals are always a priority. Review your automated transactions regularly to make adjustments as needed. Automation is a simple way to keep your family's finances on track with minimal effort. Regularly reviewing your financial plan is essential for staying on course. Set aside time each month or quarter to check your progress toward your goals, celebrate successes, and identify areas for improvement. Adjust your plan as your family's needs and circumstances change. This ongoing process keeps everyone engaged and ensures your financial plan remains effective and relevant. Financial setbacks can happen to any family, whether it's a job loss, medical emergency, or unexpected expense. The key is to stay calm and focus on solutions. Revisit your budget, prioritize essential expenses, and look for ways to increase income or reduce costs. Seek support from community resources if needed. Remember, setbacks are temporary, and with a solid plan, your family can recover and move forward. Open and honest communication about money is vital for family harmony. Discuss financial decisions together and make sure everyone understands the family's goals and priorities. Address disagreements respectfully and work toward compromises when needed. Good communication builds trust and helps prevent misunderstandings that can lead to conflict. Make financial discussions a regular part of your family routine. Setting spending limits for different categories helps keep your family's budget in check. Decide together how much to allocate for things like groceries, entertainment, and clothing. Use cash envelopes or budgeting apps to help stick to your limits. If you overspend in one area, adjust your spending in others to stay balanced. This approach encourages mindful spending and helps avoid unnecessary debt. Big purchases like a car or home require careful planning. Research your options, compare prices, and save up for a down payment if possible. Avoid making impulsive decisions and consider the long-term impact on your family's finances. Discuss major purchases as a family to ensure everyone is on board. Thoughtful planning helps you make smart choices and avoid buyer's remorse. Giving back to the community is an important value for many families. Include charitable donations in your budget if possible. Decide together which causes matter most and how much you can give. Volunteering time or skills is another meaningful way to contribute. Teaching children about generosity helps instill lifelong values and strengthens your family's sense of purpose. There are many tools and apps available to help families manage their finances. Budgeting apps, online banking, and financial calculators can make tracking and planning easier. Explore different options to find what works best for your family. Using technology can save time, reduce errors, and provide valuable insights into your spending and saving habits. Investing is a powerful way to grow your family's wealth over time. Learn about different investment options such as stocks, bonds, and mutual funds. Consider your family's risk tolerance and financial goals before making decisions. Start small and seek professional advice if needed. Investing wisely can help your family achieve long-term financial security and reach your biggest dreams. Inflation can erode your family's purchasing power over time. Stay informed about rising costs and adjust your budget as needed. Look for ways to increase your income or reduce expenses to keep up with inflation. Investing in assets that tend to outpace inflation like stocks or real estate can also help protect your family's finances. Being proactive ensures your money maintains its value. Sometimes families receive unexpected windfalls such as bonuses, inheritances, or tax refunds. It's important to use these funds wisely. Consider paying off debt, boosting your savings, or investing for the future. Discuss as a family how to allocate the money in a way that supports your goals. Avoid making impulsive purchases and focus on long-term benefits. Children learn by example, so be a positive financial role model. Demonstrate good habits like budgeting, saving, and responsible spending. Share your financial decisions and explain the reasoning behind them. Encourage questions and involve your children in age-appropriate financial tasks. By modeling healthy financial behavior, you set your family up for long-term success. Reaching financial milestones is a cause for celebration. Whether it's paying off a debt, reaching a savings goal, or making a big purchase, take time to acknowledge your achievements as a family. Celebrating together builds motivation and reinforces positive habits. It's also a great opportunity to reflect on your journey and set new goals for the future. Life is always changing, and your financial plan should adapt accordingly. Major life events like marriage, the birth of a child, or a new job can impact your finances. Review your plan after significant changes and make adjustments as needed. Staying flexible ensures your family's financial plan remains relevant and effective, no matter what life brings. Financial scams can target anyone, including families. Educate yourself and your loved ones about common scams and how to avoid them. Be cautious with personal information and verify the legitimacy of offers or requests for money. Teach children about online safety and the importance of protecting financial information. Staying vigilant helps keep your family's finances safe. Just like regular health checkups, financial checkups are important for your family's well-being. Schedule annual reviews of your budget, savings, investments, and insurance. Look for areas of improvement and celebrate your progress. Regular checkups help you catch problems early and keep your financial plan on track. With so many financial goals, it's important to set priorities. Decide as a family which goals are most urgent or meaningful. Focus your resources on one or two priorities at a time to make steady progress. Revisit your priorities regularly and adjust as your family's needs change. Clear priorities help you stay focused and avoid feeling overwhelmed. Beyond an emergency fund, have a plan for how your family will handle crises. Discuss what steps to take in case of job loss, illness, or natural disaster. Make sure everyone knows where important documents are kept and how to access emergency resources. Being prepared reduces panic and helps your family respond effectively when challenges arise. Financial independence means having enough resources to support your family without relying on others. It's a long-term goal that requires discipline, planning, and smart decision-making. Focus on building savings, reducing debt, and investing for the future. Encourage each family member to contribute in their own way. Achieving financial independence brings freedom and security to your family. Money worries can cause stress and tension in families. If you're feeling overwhelmed, take a step back and review your plan. Talk openly about your concerns and seek support if needed. Practice stress relief techniques like exercise, meditation, or spending time together. Remember, financial challenges are temporary and working together as a family can help you overcome them. Financial literacy is a lifelong journey. Make learning about money a family activity. Read books, watch videos, or attend workshops together. Share what you learn and discuss how it applies to your family's situation. The more you know, the better equipped you'll be to make smart financial decisions. Learning together strengthens your family's financial foundation. Organizing your family's finances starts with setting up the right accounts. Open checking and savings accounts for everyday spending and long-term goals. Consider joint accounts for shared expenses and individual accounts for personal spending. Keep track of account balances and transactions to avoid overdrafts or missed payments. Proper account management is the foundation of a healthy financial plan. Let's take a moment to define some key financial planning concepts. Budgeting is the process of creating a plan for your money. Saving means setting aside money for future needs. Investing involves putting money into assets that can grow over time. Insurance protects you from financial loss. Understanding these concepts is essential for building a strong financial foundation for your family. Effective goal setting is an important part of financial planning. Use the SMART method. Make goals specific, measurable, achievable, relevant, and time-bound. Break big goals into smaller steps and set deadlines for each one. Track your progress and celebrate milestones along the way. This approach keeps your family motivated and focused on what matters most. Every family has unique values that shape financial decisions. Discuss what matters most to your family, whether it's security, generosity, adventure, or education. Align your financial plan with these values to create a sense of purpose and direction. When your spending and saving reflect your values, financial planning becomes more meaningful and rewarding. Sometimes it's helpful to seek advice from a financial professional. Advisors can help you create a personalized plan, navigate complex situations, or answer specific questions. Look for certified professionals with experience in family finance. Don't hesitate to ask for help if you feel stuck or overwhelmed. Professional guidance can give your family confidence and peace of mind. Building wealth is a team effort. Encourage every family member to contribute, whether it's through earning, saving, or making smart spending choices. Share your successes and learn from setbacks together. Over time, your combined efforts will help your family achieve financial security and enjoy the rewards of your hard work. Financial planning for families is an ongoing journey. By setting goals, creating a budget, saving for the future, and working together, you can build a strong financial foundation. Remember to review your plan regularly, adapt to changes, and celebrate your progress. With commitment and teamwork, your family can achieve financial security and enjoy a brighter future together.